This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of March 29th, 2021. We wrap up the month of March. We wrap up the first quarter and look forward to something better for the precious metals in the second quarter. Frankly, that's pretty easy to do because it can't get much worse than what we had to deal with in the first quarter. On Monday, March 29th, I was traveling, so we did not have a podcast that day. One of those rare days at TFMR where we did not. And it was probably a good thing because prices were smashed pretty good on Monday. And then they were smashed even harder on Tuesday. And by the end of the day on Tuesday, gold was down over $50 on the week, with silver down slightly over $1. But we began to look at things from a technical perspective, and we noticed that not only was the dollar getting extremely overbought, both gold and silver were getting extremely oversold. And with a turnaround in the bond market, it looked like the stage was set for a bounce. And that was what we discussed on Tuesday, March the 30th. Okay, so if those two things were to happen, we'd probably get a bounce in the metals and the shares. And so let's look at the metals, and let's look at them instead of being overbought, let's look at them being oversold. You've seen this chart a million times, right? You know, the purple line is the bull flag line. The red line is that little median line. Looks like it shifted on me, but it's pretty much in the right place. Okay? And how brutally that was enforced over the last 2 weeks. That low back there in early March, you heard me mention earlier, 1673 intraday. As long as we can come down, we can even trade below 1673. I just don't want to see us close below 1673. And if you look all the way back here into April of last year, you can see some of that where this contract, the current contract, the April contract, was barely trading back then. Anyway, if 1673 fails, and we close below there on a daily basis, but even more importantly on a weekly basis, then we'd be talking, like I said today, 1650, but maybe even all the way down to the bottom of the channel like we were in late September and in late November. All the way down the bottom of the channel is 1600. Oh, my gosh. Now, why I don't think that's going to happen is this RSI, okay? Since we've been coming down, that low, 24th of September, whatever that was an RSI of 36.5. Then when we really washed out in an ugly, ugly, ugly November, we bottomed out at 25. And the RSI a couple of weeks ago, when we came down and made this first hold of 1680 with that intraday low of 1673, we got to 29.75. What if they hit us again tomorrow? And at some point in the morning tomorrow, prices dangling down here at 1675, 73, something like that. And you get the RSI to come all the way down from 32 to 29 or 30. That would seem to be a pretty good low. Let's say that doesn't happen. Let's just say that tomorrow we actually go sideways. We have a little green candle. We get back up to 1690. Tomorrow in tomorrow's podcast, we're going to be talking about a potential for a positively divergent low, higher low. Because, again, we got to 1673 with an RSI of 29.75. Well, today we got to 1678, and the RSI is 32. Okay? So we'll see where that goes tomorrow. But the potential's there for a little double bottom here at 1680, and then we can take a stab back up again with the cooperation of the bond market and the dollar. Okay, here's silver. Look at the RSIs in silver. Okay, it was all the way up here at 80-something last summer. And then fell all the way to 31.75 in late September, 42.69, and 38.50. And look what it is tonight. 30. It hasn't been 30 since March of last year when we were down there like at 15. Okay? So do you think silver's getting overcooked? Do you think if they ran silver down sharply without any green candles between now and Thursday or Monday of next week or something, we banged all the way down here to just below 23, what would the RSI be then? 22? So silver very close to a bounce in here. Again, and when I remember that dollar chart I just showed you, where we rally to? Well, at least back up to that red arrow. which by later this week, early next, will be north of 25. That's a tradable rally. And lo and behold, a tradable rally began the next day on Wednesday, March the 31st. Yep, we were right. The dollar was overbought and ripe for a pullback. That pullback began on Wednesday, which allowed both of the COMEX precious metals to get their footing and begin to move higher. Some say, what good is technical analysis in a manipulated market? Well, that's what we do here at TFMR's Report. That's why I've had a site for almost a dozen years, because we understand the markets are manipulated. We understand how the banks and their traders use technical analysis against you. And that's what helps us to find support levels, resistance levels, and we take it from there. But one thing you do know, in traditional markets like the dollar index, some of the traditional TA does help. That's what helped us plot out this potential bounce that began to develop back on Wednesday. And we talked about that with the dollar index as an example that day at TFMR. First up, your dollar index. Again, I thought I would show you exactly what I expect here over the next couple of days into the first part of April. RSI down a little bit today from 71 to 70. So not much, right? Still the highest it's been since a year ago at this time. Due for a pullback. How far? Well, that little trend arrow from that low at the end of February and the little trend that's rallied at 3 some odd points or more in the month of March, you can see that trend arrow by tomorrow, Friday, Monday is about 92.5. At the same time that trend arrow is at 92.5, see that red line swooping in? That's the 200-day moving average, which when we got above it last week, that's when the dollar index soared from 92.5 to nearly 93.5. Well, what do we know about long-term technical indicators like trend lines and moving averages? When you finally break through, you inevitably pull back to test it. If it had been resistance, you test to see if it's support. If it had been support, you rally back up and you see if it becomes resistance. So by early next week, that red line, the 200-day moving average, is going to be almost right on top of the blue little trend arrow I've drawn for you. So again, while I think the dollar index could go to 94, and it likely will some point in April, I also think it'll pull back, more likely to pull back first. If that can happen, that's going to help us out. As we begin to wrap up the week, on Thursday, April 1st, ahead of a 3-day holiday weekend, that sell-off in the dollar continued. It actually fell about 1/3 of a point and back under 93. We also got some help out of the bond market, which also began to rally back with rates coming down a full 7 basis points. I mean, remember, we caught that back on Tuesday as well. The reversal in rates, which looked like a double top. At 175 on the 10-year, we finished up at 167 on Thursday. This helped fuel an extended rally, extended bounce in both metals. And by the time trading wrapped up on Thursday, we were almost back to even on the week, making back all of the losses from Monday and Tuesday on Wednesday and Thursday. And with that in mind, we took a look at the chart in COMEX Gold. So let's look at that. Where's that breakout? Again, here's your chart. Nothing could be more important for following gold. You got the bull flag line, the bull flag on the weekly and the monthly charts. That's the purple line, which is perfectly parallel with the red arrow that we started following all the way back in the middle of August. Look where we closed today. Right on it. Again, what's the significance of that? Why did the banks work so hard 2 weeks ago to keep us below it? Because once we got above it in early November, look how quickly we went to the purple line. They had to smash us all the way back down. And once we got back above it in the middle of December, look how quickly, by the 1st of January, we blasted through the purple line. They had to smash us all the way back down. But as long as in January, all the way through the end of February, as long as we were between the red and the purple, let's count how many times we went from red to purple. 1, 2, 3, at least 3. So getting back above the red makes it almost certain that we're going back to the purple. And then, of course, the very important level of 1780, which, again, was support and is now resistance. You get above 1780, and the generalists are going to really take notice. So that'll be the key level We've got to get above the red arrow first. And on Friday, April 2nd, the U.S. market and markets worldwide were closed for the observance of the Christian holiday of Good Friday. There was some economic data today for the U.S. jobs report, which came out stronger than expected. We probably would have seen a smash of gold and silver with a rising dollar and rising yields in the U.S. had the markets been open. But they weren't. So we'll see if the reaction is muted come Sunday once Globex trading resumes at 6 o'clock Eastern. For today, though, let's just take a look at the weekly chart of the GDX. Of course, with the New York Stock Exchange closed, the week ended yesterday. And as you can see on this chart, we put in a pretty little green candle for the week. The tail hanging all the way down near that very important support line of 3150. But instead, rallying to recover near its highs of the week at 3360. That's up almost a full point in a week, or almost 3%. And again, this is a week where gold was about unchanged and silver was slightly down. Are the mining shares beginning to show signs of a bottom? Well, yeah, maybe. Again, that critical support at 3150. If the mining shares can begin to move higher now and get above that purple arrow, which is the top of the bull flag line that you'll find on both the weekly and monthly charts, if the mining shares can now begin to rally and break out, and that GDX gets above 34, but then above 36, they'll probably start getting some positive momentum. Of course, we're going to need the precious metals to rally at the same time, so we'll see if we can get all of this to come together in April. Thanks again for listening to the TF Metals Report podcast highlights. We hope you appreciate this free service. And if all of this interests you, please stop by tfmetalsreport.com and consider a subscription. It's only $15 per month. It is hands down the best online precious metals community. So it's not just analysis, it's interaction with a whole bunch of other people that probably feel the same way you do as we prepare for the end of the great Keynesian experiment. We'll have another podcast for you next week. In the meantime, I hope you have a great holiday weekend.